Okay, you guys, we're now going to take a look at some exercises from Chapter 8, dealing with inventory. We're not going to go through FIFO, LIFO, and average cost. I felt like we covered that pretty well in financial accounting. We're going to look at some perpetual journal entries, which we also covered in financial accounting, but we're going to contrast those with the periodic journal entries for the same transactions. And then we're going to look at some issues about whether a company should pick up certain items in their inventory, dealing with consignment and who they belong to while they're in transit. And we're going to look at a different method of handling discounts, or two different methods of handling discounts as well. But let's start with exercise 8.1 on page 457. We're dealing with perpetual inventory system. This is the one you probably should be accustomed to if you took my financial accounting class. We're going to compare it with the periodic system. Let's read it. It's on bottom of page 457. John's specialty store uses a periodic inventory system. The following are some inventory transactions for the month of May 2016. John purchased merchandise on account for $5,000. Freight charges of $300 were paid in cash. Okay. So on number one, and I'm just going to enter a 1 here. Since it's a periodic system, we're going to use our inventory account. We're going to increase it every time inventory is purchased, decrease it every time inventory is sold. So we're going to debit inventory. The book handles it in 2 transactions. I think we can handle it in 1. The freight charges will be a part of the cost of the inventory. So we're going to debit inventory for $5,300. The inventory was purchased on account, so we'll credit accounts payable. For the actual amount of the purchase, $5,000. And we paid the freight charges, so we're going to credit cash there. Alright, on number 2, John's returned some of the merchandise purchased in 1. Cost of the merchandise was $600, and John's account was credited by the supplier. Well, that's fairly simple. If we return part of what we purchased here, we purchased it on account. So we'll debit accounts payable to decrease the liability for the amount of the return, $600. And we'll credit inventory for $600. Okay, merchandise costing $2,800 was sold for $5,200 in cash. Okay, and this is on number 3. So we'll debit cash for $5,200. Again, your book takes care of this in 2 entries. I think we can handle it in 1. We'd also debit cost of goods sold or cost of merchandise sold. Let me see which one your book uses. They go with cost of goods sold, which is the more common of the 2. I think our financial accounting book said cost of merchandise sold. And I think we said we'd use that for a merchandising business, cost of goods sold for a manufacturer, but they're kind of used interchangeably. Merchandise costing $2,800, so we debit cost of merchandise sold for $2,800. And we're going to credit sales for the sales price, $5,200. And we'll credit inventory for the $2,800. Okay, now that takes care of the entries on exercise 8-1. Now let's move along with exercise 8-2. It's the exact same thing, except we're going to use a periodic inventory system. Now let's look at how it's going to be different. First off, we're not going to use an inventory account. We're going to debit purchases instead. And we won't have the cost of goods sold account. We'll calculate it at the end of the year. So this was, I'm going to put here 8-1. And then it wants to do August 1. What if I put it over here, 8-1? It still does August 1. Just know this was exercise 8-1, I guess. Now let's go to exercise 8-2. Same transaction as one above. This is on top of page 458. But now they're using a periodic inventory system. John's purchased merchandise on account for $5,000. Freight charges of $300 were paid in cash. This time I am going to make two entries. Instead of debiting inventory under a periodic system, we'll debit purchases for $5,300. The credit is still to accounts payable. Also a part of number 1. For the freight charges, we're not going to include those in purchases. Instead, we're going to include them in an account called freight in. And those amounted to $300. I'm sorry, I included those up here, didn't I? The actual purchase was only $5,000. This amount should have been made for $5,000. Pardon my error, I'm sorry. The $300 in freight charges will be handled here in the separate entry. We paid them, so we'll credit cash. See how that's quite a bit different than up here. We had the one entry, we debited inventory for the full amount, $5,300, credited accounts payable for $5,000, and cash for $300. Accounts payable still got credited for $5,000, cash still got credited for $300. But instead of debiting inventory, we debited purchases for $5,000. Instead of including the freight charges in inventory, we used a separate account, freight in the periodic system. Okay, now on number 2, John's returned some of the merchandise purchased in number 1. The cost of the merchandise was $600, and John's account was credited by the supplier. Okay, number 2, just like above, if we made a return, it's going to decrease what we owe on account, so we'll debit accounts payable to decrease the liability, $600. That part doesn't change. The account to credit is purchase returns. It's an account only used in a periodic inventory system. Quite a bit different than the one up here, or at least the credit was different. Okay, and then merchandise costing $2,800 was sold for $5,200 cash. Okay, here on number 3, We're going to debit cash for 5,200. We're going to credit sales for 5,200. But no entry is made for cost of goods sold, and no entry is made to reduce the inventory account under the periodic system. Okay, so this one, periodic. Periodic inventory system, that's 8. That's E8-2. Here, I couldn't get that to fit above. Up here we got the perpetual inventory system, exercise 8-1. That's these transactions. And then down here we have the periodic inventory system, that's exercise 8-2. And that's these transactions. Some not so subtle differences there. Some similarities too. But I don't think you'll have any trouble working those two exercises in the Connect Plus. Okay, thanks.